Your mindset is your armor. Your trading strategy is your sword. Your risk management is your shield. Gear up, and that is how you defeat the markets. It was the summer of 2020, during the COVID-19 pandemic, where we still had to wear masks and practice social distancing. I was tired of being broke, and I was so sick of losing money. So I sat there on my desk with a hot glass of green tea, scrolling through hundreds of trading strategies on YouTube, thinking which one I should watch next. I started to contemplate to myself, why is it so hard to make money from trading? Should I just quit trading? There were so many videos on smart money concepts, price action, supply and demand, and different trading indicators. So over the next few weeks, I tested out all these different trading strategies. And at the end, I decided to choose price action because it's not only simple to understand, but it's also very, very effective. A few months later, I chanced upon this one book by Dr. Alexander Elder, who is a professional trader and a best-selling author. Through this book, I discovered the formula to become profitable at trading. I finally start seeing some consistent profits after I mastered this one formula. If you had to watch just one video that will make you a profitable trader, this is it. I created this video for all the losing traders, and most importantly, it is directed to my past self, to shorten the learning curve and help my past self become profitable faster. There are 3 keys of trading that you must master if you want to become a successful and profitable trader. It is called the Holy Trinity of trading, the 3 M's: method, money management, and mindset. Let's dive deep into each one of these 3 keys to trading success. Method. Method is how you trade the market. Let's look at a trade where I took at the start of August, which went to exactly where I wanted it to go. So over here right now, we are on gold, and we first start off by analyzing on the higher time frame to determine like the overall market structure, and it gives us like a bias whether we should enter for a sell or enter for a buy, because we want to trade with the trend, right? So on the daily time frame, you can already see there is bearish market structure. What do I mean by that? Lower highs, lower lows, lower highs, lower lows, another lower high, and price could be potentially creating another lower low right here, right? So I ended up somewhere around here. So what I did was that I went down to like the smaller time frame, the lower time frame, which was around 1 hour time frame, to look for my entry, right? So on the 1 hour time frame, I went down here and I identified a key level over here. You can see there's a key resistance area that we have right here. Okay, so this is a key resistance area, and I also saw that price created a new lower high. You can see this high is lower than this high right here, and this high is lower than this high right here. So you can see in a way, right, price is creating your bearish market structure on a lower time frame as well as on a smaller time frame as well. So right now, my higher time frame structure aligned with my lower time frame structure, both bearish. So in this case, right, I'm looking to enter for my sell position, and I'm going to be entering when price has reached this resistance area, right? So what I did was that I waited for price to get down to this resistance area that we have right here, waited for it to break past it. As you can see right here, this was somewhat of like a false breakout. Okay, false breakout, because price broke through it, there is no retest, there is no nice retest before heading back up, right? It just broke through it, and right now it's dropping already. And at this point of time, right, what I even did was that I can pull out my Fibonacci, drag it from point A to point B, and I can see price managed to retrace to the 78.6 level, and right now it's creating a new lower high. So over here, I saw that price did this little double top. If you go down to the 15-minute time frame, you can see one top, double top right here, rejecting this key level that we have right here. And another thing was that price was at this resistance level where there is already sellers waiting for this area to short the price down, right? There is supply at this area. So first confluence, price is at this key resistance level. Second confluence, there is a double top. Third confluence could be market structure. This is a lower high, right? So now we had our 3 confluence. So I immediately entered for a sell somewhere right around here. I don't remember the exact spot, but somewhere right around here when this double top has been formed, enter for a sell here. So obviously, I'm going to be placing my stop loss based on market structure, right? If I place it based on market structure, that means it will be above this last high right here, this last lower high that we have right here, and I'll place it a few pips above it. Because if price eventually like maybe starts coming down to this key level and retest it and it actually go up, right? Because turns out I was wrong, right? I was wrong. Then in that case, I get stopped out over here because price has broken market structure. And in that case, I'm okay with getting out of that trade, right? That's when I need to tell you guys a point, right? When price hits your stop loss, the moment price hits your stop loss, get out of that position. Never negotiate with your inner bitch. Your inner bitch is telling you to, oh, you know what, you should like stay with the trade and, you know, just pray to God and hope that the trade will eventually turn around. But you end up just taking a huge, massive loss, right? So once you're out of the position, then that is when you can reevaluate your situation with a clearer mind, right? Then that is when you can think about, oh, what actually went wrong and how you can improve on this trade, and so you can don't make this same old mistake over and over again. So yeah, so place my stop loss above this last lower high that we have right here, and my take profit was at the next key level, right? Was at the next key level, which if you go down to like maybe the 1 hour time frame, you can see the next key level is actually this key resistance area that we have drawn right here, right? 1, 2, 3. Yeah, this is a pretty solid support level. I mean, yeah, pretty solid support level. And in this case, right, what I did was that I also plotted out Fibonacci later on, not now, right? This was still at the start of the trade, right? So yeah, I basically wanted to place my take profit level at this area. So what I did was that I draw multiple key levels below this area right here, because I know that price will go down to point A, point B, and most importantly this point C, potentially this point C that we have right here. Yeah, so this was the first key level that I drawn, and I expect price to go down to this area, which you can see price eventually created a new lower high and yeah, went down to our first point A, right? So my ultimate take profit was still at like point B, which was like still all the way down here, right? Still all the way down here. And you can see the moment price created a new lower high that we have right here, right? What I did was that I moved my stop loss to break even. Okay, actually when price goes down to like somewhere right around here, that is when I already moved my stop loss to break even already. And then when price created this new lower high that we have right here, that is when I move my stop loss from here. Goddamn trading view. I move my stop loss from here all the way down to right here. This new lower high a few pips above it. Right, that's my new stop loss. And then now I'm waiting for our price to create a new lower high again. You can see price is like struggling to break past this area, so this could be a new potential lower high. Or right here you can see price actually went up a little bit. Okay, this will be a new lower high, right? This is a new lower high. So the moment price retrace once again, I could easily move my stop loss to over here. So right now, even if I get stopped out, right, I will actually get stopped out with some profits actually. So what I can even do in this case is that plot out a Fibonacci point A to point B right here, and you can see price has retraced to 38.2 and it's gonna go down to this 1922 area that we have right here. Or you can even draw another Fibonacci right here, point A to point B right here. You can see price will go down to this 1915 area that we have right here, this negative 27 extension level. So that was what I was counting on the trade to do. You can see price eventually slowly but surely made its way down to our take profit area, which was this key level that we have right here. Yeah, this key level that we have right here. The moment, I mean, the reason why I place this key level is, if you look to the left, there's a lot of demand at this area, isn't it? You can see price come back down here, pump back up, come back down, pump back up, come back down, pump back up, come back down, pump back up. So that's like a very key demand zone that we have right here. And another thing you can put is, I mean, another key level you can put is somewhere right around here. Yeah, somewhere right around here. You can see right here also can be another key level. So if price break through this area right here, right, most likely it's gonna get down to this 1902 area that we have right here, and it's also kind of lining up with the negative 61.8 extension level. Yeah, let's fast forward to the present actually. I can see price actually eventually went all the way down to this 1902 area, and it even went down to my ultimate area, my ultimate key level, I mean, which is this 1890 that I have drawn right here. Yeah, it literally went all the way down there. So that was basically how this beautiful trade played out. It went to exactly where I predicted it will go. It smashed point A, point B, point C, point D. As simple as that, guys. Pure price action. How do you know if your trading strategy works? You need to trade on a demo account for a few months and achieve a consistently profitable track record. If that strategy is not profitable, immediately get rid of it and test out another trading strategy. Like I said, there are thousands of trading strategies out there for you to choose from. You need to choose one that is back-tested and proven to be effective and profitable, and it also suits your personality and your schedule. For me, I chose price action, and that is the only method that I trade and teach to my students. If you want to learn how to trade price action, check out my free trading courses playlist in the description. And the ultimate resource on how I trade price action is the trading blueprint. Within my trading course, you will not only learn about my method, but you will also learn how I manage the mind and money aspects. Check it out if you want. Based on what type of trader you are, then that is when you can determine what time frames will you be analyzing the charts on and getting your entries. For example, a scalper can be entering their trades on the 5-minute time frame, but a swing trader will enter his trade on, let's say, the 1-hour time frame. So it's all like different time frame comparing to different type of trading style that you have. And then you also have to figure out what trading strategy will you be using. Are you going to be using price action or different indicators like Bollinger Bands, RSI, or MACD, or even smart money concepts? Now bear in mind that all trading strategies work, be it price action or smart money or indicators or ICT concepts. All trading strategies work. You just need to find one trading strategy that works, that is effective, that you like, that suits you, and stick to it. That's it. Money management. Money management is how you manage your risk and reward. How you manage your money will determine how long you last in the market. So if you want to trade for the long term and make consistent profits, you have to protect your downside. And that is exactly why you need to master money management. Without proper money management, you will lose more money than you make, and you will blow accounts. As traders, our goal is to take the trades with the lowest risk and the highest reward. Money management will allow you to minimize your losses and maximize your profits, so you can actually become profitable in the long run. Only trade with money you can afford to lose. If you need that money to pay rents or your daily expenses, do not, I repeat, do not put it inside your trading account. If you only have $1,000 in your bank account, don't put all that $1,000 into your trading account, because you'll be so attached to the money that your emotions will get involved and it will cause you to make bad trading decisions. Take a small portion out of it and put it inside your trading account. In this case, you won't be so attached to the money and it won't affect your mental state as much. Always think about risk before reward. Before you take that trade, instead of thinking how much money you can potentially make if you are right, think about how much you will lose if you are wrong. Are you okay with losing that amount of money? If not, use a smaller lot size. Determine your risk per trade. The general rule is to risk 1% to 2% on each trade. This means that if you have $1,000 in your trading account, you should only risk 1%, which is $10 on each trade. If you are a beginner, you will 100% make mistakes and lose money in the market. Knowing that you will 100% lose money, you should be smart enough to risk 1% on each trade, so you can actually minimize the amount of money that you lose. As time passes, when you become more confident and more competent with your trading, that is when you can slowly increase your risk per trade to an amount where you are more comfortable with. Most traders, they risk way too much at the start because they want to get rich quick fast, and they will over leverage and blow their accounts, and they eventually give up and end up quitting trading within 6 months, and they don't last long enough to see themselves become truly successful at trading. Don't rush the process, guys. Focus on capital preservation. Capital preservation means that you need to manage your trading capital so that you are not wasting too much of it on any single trade, and also you are not trading too often. Be like a sniper instead of a machine gun and take one good trade and then the next good trade and then the next good trade, one by one. Only use your trading capital when a high probability trade setup appears. If you do this, you will have enough capital reserved for the better trades. Don't blow your trading capital by over trading and taking all the shitty trades. If you do that, you won't have enough capital that is reserved for the good trade setups. It's like a boxer regulating his energy so he doesn't burn out all his fuel in the first round. If he put in 100% of his energy in the first round, he may beat the shit out of the opponent. But then what about the other rounds, the remaining rounds? He doesn't have enough energy to sustain himself for the whole fight, and eventually the opponent, who is able to reserve and conserve his energy properly throughout the entire fight, will win and put the other boxer in his place. My profits skyrocketed when I decided to make every trade a smart risk to reward decision. If the trade does not have a minimum risk to reward ratio of 1:3, I will not take that trade. I will wait patiently for the next opportunity that will give me a better entry so that I can have a higher risk to reward ratio. If you are truly disciplined, every trade that you take should only end in 4 ways: big win, small win, break even, small loss. It should never ever end with a big loss. If you don't manage your money properly, it doesn't matter if you have the best trading strategy in the world, you will still lose. I've been saying this same advice for the past 2 years now, so if you go onto my YouTube and sort my videos to the oldest, right, you will see me talking about this same old shit over and over again for the past goddamn 2 years. Most traders are chasing high returns, and that is exactly why these same traders are getting either low returns or no returns at all. 5% per month consistently over the long term will make you a millionaire trader. Think long term. The final M is mindset. If you don't have a proper trading mindset, you won't make money consistently. Yes, you can make some money here and there out of pure luck, but you will end up losing the money that you have made. Everything begins or ends with your trading mindset. When you are trading your hard-earned money, you're gonna experience a lot of emotions like fear, doubt, and greed. All these emotions will cause you to make stupid decisions. This means that if you trade based on your emotions, you will lose money. In trading, you don't get paid for your time. You get paid by your decisions. So it is very important for you to learn how to control your emotions so that you can actually make the right decisions when you trade. Accept that losses are part of trading. It's part of the game. Expect your trades to lose 50% of the time. Embrace the fact that losses and wins are inevitable for any trading strategy. If you can't learn to accept small losses, sooner or later, you will take big losses. There's a lot of factors that goes into developing a proper trading mindset. And if you want to learn more, check out this video right here where I literally teach you how to eliminate your emotions so that you can win more trades and lose less. But if there is one thing that you must understand about trading psychology, it is discipline. 80% of trading losses can be prevented if you just trade with discipline. Discipline is not an option but a must in trading. The discipline required to follow your trading plan, the discipline to use the correct lot size, the discipline to patiently wait for the perfect trade setup. Discipline is the only secret to profitability. At the end of the day, you can't control your emotions, because when your emotions are high, your logic is low, so your emotions will take control of you. But what you can control is whether you have the discipline to do the hard things, the things that separate the professional traders from all the losers. Most people think that profitable trading is staring at the charts all day, but in reality, profitable trading is about doing nothing and patiently waiting for the perfect A+ trade setup to appear. Now, all these 3 keys, they are equally important. They will form the backbone of your trading plan. It's like a chair with 3 legs. If you remove one of them, you will fall and hurt yourself, or in this case, your trading account. This means that you need to master all these 3 keys if you want to become a successful trader. You can have the best trading strategy that works 90% of the time, but still lose money if you don't practice proper money management and you don't have the proper trading mindset. And money management and a proper trading mindset won't help you unless you have a winning strategy that is backed up by a profitable, proven track record. And by the way, shameless shout out here, I teach all of this in the trading blueprint. Every human has two traders within us: the builder and the wrecker. The builder is the positive trader, the one that's optimistic and believes that you can succeed, and he trusts that results will come with consistency and is always learning from his mistakes and has a growth mindset and is able to adapt to the market consistently. On the other hand, the wrecker. The wrecker is a negative trader that blames the market or someone else whenever his strategy fails again. He's fixated on getting rich fast, which means that he will go against all the rules in his own trading plan. And he has a huge ego and he wants to be right all the time rather than make money. And he tells you that you will never succeed at trading because 90% lose. For most people, the builder is stuck in the trunk at the back of your car. Your headspace is your car and you are the driver. While you are driving, you have the wrecker in the passenger seat telling you that you can't succeed, you suck at trading. And then you start to hear this, no, and you are thinking, what the fuck is that mumbling? What is that mumbling that is at the back of the trunk? It's the builder, the person who is rooting for you and wants to see you succeed, but he's stuck in the trunk with his hands cable tied and duct tape on his mouth. Your job in life is to develop to such a high place where you take the wrecker out of the passenger seat, tie his hands, put a duct tape across his mouth and throw him back to the back of the fucking trunk, and take out the builder and put him in your passenger seat. That is your role in trading in life. Unless you do the work, you will not hear the builder over the wrecker. Now you must be thinking, oh hey Brad, what if you just kick the wrecker out of the car? That's never gonna happen. Because life is funny this way. We are supposed to have the builder and the wrecker within us, the angel and the devil. You know, it's like those cartoons where you watch where the main character is like deciding what to do, and then there is the angel telling him good things on the left shoulder, and then there is the devil telling him bad things on the right shoulder. Same thing, you can't get rid of the devil permanently, but what you can do is to begin to control and silence the wrecker over time. Now, the only way you can do that is by doing the work, choosing the path of most resistance, choosing discipline over profits, choosing money over ego, and duty over desire. Follow your trading plan, start journaling your trades, review and study your trades, trade like a sniper instead of a machine gun. That is the only way you can silence the wrecker. Your actions determine who's sitting in the passenger seat, the wrecker or the builder. You decide. Yes, profitable trading is not comfortable, but who said trading is supposed to be easy and comfortable? If trading is easy, every single trader would be driving a Lamborghini on the road. But that's not the truth, isn't it? I had to go back in time and start all over from scratch. I will do these 5 things. These are the same 5 things that have made me a profitable trader and turned me from a broke 18-year-old kid to a guy who's making over 6 figures from trading. The first thing is rules. You need to have trading rules. Right? Trading is like a business, so you have to treat it just like a business. And you have to have rules to structure your trading, and most importantly, you have to follow these rules and never ever defy them. Day in, day out, religiously follow them. Number 2, discipline. Just like I mentioned earlier, you need the discipline to do the right things, to do the hard things, to do the things that make you very uncomfortable, very hard, but it benefits you in the long run. You know, things like following your trading plan, reviewing your trading journal, journaling down your trades, and waiting for the patiently waiting for the perfect trade setup. That is discipline. You need the discipline in order to become a profitable trader. That is the only so-called secret to becoming a profitable trader. Number 3, risk. Accept risk. Without risk, there is no reward. You need risk in order to make money. Think about that for a minute. If all the successful people in the world did not take the risk, there won't be all these companies like Facebook, Google, Apple. No, none of that. They all got to where they are today because they took risks. And you need to learn to take calculated risks, right? Don't be stupid enough to like take random risks where you bet all your life savings in some shitty Bitcoin or some shitty crypto that will like apparently 100x in the next 12 months. That's just pure stupidity. That is not calculated risk. You need to take calculated risk. Meaning, do the research. This research will help to reduce the risk in the investment that you're about to take, right? So do the research, do the work, and this risk will be somewhat reduced. But understand that the market is uncertain, the risk will forever be there, but just by studying and learning everything that is to know about trading, it gives you an edge, right? It gives you like a higher probability of you winning the trade. Number 4, patience. Like I said just now, profitable trading is not staring at charts all day. For me, I don't like to stare at charts all day, which is why I don't actually stare at charts all day. I'm only going to be trading when there's opportunities and when I'm free. That's it. As simple as that. I'm not going to be trading and looking at the charts all day, every single hour of the day from 8 AM till 8 PM, because that's what I used to do last time, right? So if I do that, I always went into the mindset where I think that, oh, you know what, today is a new day, I have to make money today. So you know what, I'm just gonna go into the charts and take a trade, which I'm not supposed to. There is no opportunity, but guess what, I'm just gonna take that trade anyways, because I want to make money today. I want it right now. I want instant gratification. Society, TikTok, all this stuff has really like given us the option to instant gratification. If you want a nice meal, you can just order Uber Eats or Grab food, and the food is gonna deliver to your house in 30 minutes. But back in the hunter-gatherer days, the hunters have to literally go out there, kill animals, and hunt for food on their own, with their own will, with their own power, spending a lot of time in the jungle, worrying about whether they will die by some freaking saber-toothed tiger or some shit. Don't give in to instant gratification, right? Be patient, take the right trade, take the perfect trade setups that will actually give you a higher chance of you making money, and preserve your capital for these trade setups instead of spamming them on those shitty little trades that will take throughout the day. So for me, what I like to do is to set alerts at like a key level where I want to enter for a buy at. So when price eventually reaches that key level, that is when TradingView will notify me, send me a notification telling me that, hey Brad, you know what, Euro USD is at this key level. Then that is when I can open up my laptop and then analyze the charts and enter the trade from there. As simple as that. I don't stare at the charts all day. Lastly, time. Trading is actually a maybe get rich quick slow scheme. Does that make sense? Right? I came into trading with the mindset that I'm gonna become a funded trader, or I'm gonna become a profitable trader within the first 6 months. And that was the wrong mindset, because I remember I started trading for 3 months, and then I went on to start my first live account after 3 months, and then I blow my first account, which was $500, and I blow the second account, $500 gone, and I kept on blowing accounts after accounts because I was skipping the process. I wanted to get rich quick fast, honestly. I was damn sick of being broke, and I wanted to become a millionaire trader and live this dream lifestyle that every trader is living, right? So I skipped the process, I skimmed through all the study materials, quickly went to the live account, started making a shit ton of mistakes, lose a whole lot of money, lose pretty much 80% of my life savings back then, and then I just make mistakes, and I just ended up didn't really becoming profitable until maybe like my 2nd or 3rd year. So guys, understand that trading requires a lot of time and consistency. It's all about consistency. When people see me make over $50,000 in a month, or even 100k in a month, right? They think that I just made this 50k in a month. That is not true. I didn't make that in a month. It's hours, hundreds of hours on the charts, spending years on the charts, and reviewing my trading journal, figuring out what works and what doesn't work. That is what got me to making 50k per month. But it's not overnight. It takes a lot of time. And you guys need to have the patience to really trust the process and trust the fact that you will make it, as long as you are disciplined enough to do the hard things, the uncomfortable things that separates the profitable traders from the losers. With discipline come profits. So these are the 5 things. You have to have a set of trading rules, you have to have solid trading discipline, and need to accept risks. And you also need the patience to wait for the perfect trade setup. And lastly, you need to give it some time, guys. It's not gonna make you a millionaire trader next week or maybe even the next year, right? It all depends on what type of trader you are and how good you are. Some people can become profitable traders within the first 1 year, but some people can take maybe 3 years or even 4 years to become profitable traders, and some can take 5 years but never ever see any consistent profits. Like I said, it all depends on you. Depends on whether you are disciplined enough to do the hard things. If you do that, I can guarantee you there's going to be a higher chance of you becoming a profitable trader. 4 months left in 2023. Alright, rather by the time this video get uploaded, it's 3 months left to 2023. Make it worth. Make it count. Now, if you want to learn how to master trading within 6 months, watch this video next. Trust me, this is the best video that you'll watch on trading that's on my YouTube channel. It will teach you everything there's to know on how to master trading and how to make 6 figures from scratch. Watch this right here. And remember, you're just one trade away. Mwah!